Assalamualaikum, everyone. Today is August 15th, 2021. Welcome to Wall Street to Bay Street, Sunday Chai with Sharia Portfolio Canada. My name is Nadeem Mian.
And my name is Shamil. Get your chai ready and let's get right into it. So we have a fun game plan, kind of switching it up this week. There's been a lot of driving forces in the market right now. So for educational purposes, we're going to go over some of those driving forces, and we're going to see if it's going to have a pro or con effect in some way for the second half of the market. So I guess the first one, everyone's favorite topic, COVID. Nadine, take it away.
Sure. So COVID is obviously, something that is in our minds 24/7 now, apparently, and how it relates to the market and how COVID has impacted the market. I would say this: it's both. It both can be pro and a con at this point. What I mean to say by that here is, as a situation sits right now, there's a Delta variant, which is now, hitting, unfortunately, the countries and the world right now. The question for the market really kind of becomes, have we reached the worst, right? Is this the worst point in terms of the wave and the hospitalization rates, death rates, and then cases and so forth, right? In general, what I would probably say is, if, for example, we do reach peak cases, the market's always looking ahead. And if the market sees that, we know how this story plays out, and if things are only going to get better, then the market will actually take off. What we've come to find out is that, more often than not, vaccinations are working. So that is a positive. However, the negative could be that, the Delta variant, there's all sorts of other variants out there. COVID is something that, it looks like it's going away, but then it can come back. So there's always this uncertainty, and that can obviously be a con or a negative for the market, in the sense that, the fourth wave could come and go, but there could be a fifth wave. Who knows, right?
Perfect. The next driving force we have is obviously, earnings season was just around the corner. So what do you think corporate earnings plays a part in this?
Yeah, sure. I mean, corporate earnings is one of the main drivers of stock prices. And, Finance 101 will tell you, the price of a stock is a lot of it is driven on the fact that how much earnings can it make. We just went through the second quarter of 2021, and it was actually one of the best quarters, since 2009. And about, 80, over 80, about close to 90% of the S&P 500 companies reporting were actually beating the earnings estimate, and by the same margin, they were also beating the revenue estimate. So what that's really kind of telling you is that corporate earnings have been primarily very strong. We've seen growth from the previous year, of course. So that's obviously a positive, for the market. Corporate earnings is paramount. So I would say generally, we're in a positive situation right now with that. However, the negative is, going forward, the next quarters or the next year, where, the pace of growth, is it going to slow down? And the analysts are saying, yes, our earnings are going to continue. Pace can actually slow down. So that's one of the small negatives, but overall, in general, like I said, the S&P 500 has shown that, the companies that have reported record numbers, and and have beaten by a huge margin from what the analysts' expectations were.
Yeah, similar to that, the valuation of a market is a pretty big driving force as well. So can you elaborate a little more on that?
Sure, yeah. And so, earnings and valuations, it's all connected. PE ratio, that's a very popular ratio when people talk about valuing the market. But right now, markets, at least especially in North America, if you take a look at the S&P 500 or the TSX, we're pretty much close to all-time highs. So the question kind of becomes, how much higher can we go? So I would say, with that in mind, you always have to kind of factor in, okay, well, the price is going higher, but our earnings also going higher. And as I previously alluded, earnings are also going higher. So there is this kind of this balancing act that's going on with price and with earnings. Now, having said that, the PE ratio is a little bit on the high side right now. Historically, I think, It's about at 30. It's over 30 right now in the S&P 500. But there are other there are other markets out there that might be historically are trading below that at their all-time highs and do have better valuations. For example, like emerging markets right now have actually underperformed the S&P 500 and North American market. So that you can make the argument that there are probably cheaper or better valuations in other markets relative to what's going on here in North America.
Perfect. And kind of going forward from that, inflation has been a pretty hot topic as well, and it seems to be a pretty driving force in the market. So can you go over that a little more as well?
Sure. So I mean, inflation is essentially the cost of money, right? Sorry, let me say repeat. It's the value of money, and how much or how little is it depreciating, right? And obviously, if you have a higher inflation rate, that means that your dollar isn't worth as much as it used to be. So right now, what we're seeing with inflation is that historically inflation, is hitting, like for example in the U.S. it is right now above 5%. Same thing in Canada. It's above the 2% kind of benchmark that most central banks target. So having said that, when inflation is high, what that simply means is that companies now are going to be paying more for material goods and other items that will that could kind of increase their costs, right? So, and of course when you increase your cost, that means that you might not be making as much money. These are just kind of basics of inflation and cost. So normally inflation is obviously not a good thing. What can make it, looking forward, what can make it good or bad, I mean, and the debate kind of is the inflation that we're seeing right now, is it just a short-term thing because of the COVID and lockdown and behind that, and it's just we're going to go back to normal, or at least some sense of normal the next year? Or is it something that's going to be ongoing? Obviously if it's a one-time thing, it's a positive, but if it's a long-term ongoing thing, then that can kind of obviously cut into corporate earnings and be negative for the market.
Perfect. And the last driving force, obviously with December and the holidays coming up, what kind of impact, or what would that have to do with the market?
So I mean, we're at this time of the year right now. We just finished the second quarter, so we're entering into the third and the fourth quarter. Typically, the third and the fourth quarter are historically been good times in the market. There's an expression: sell in May and go away, and come back towards November. There's a term out there, the Santa Claus rally, where you get some type of a rally of the year. But fundamentally, a lot of corporations, their third and fourth quarters are actually their heaviest quarters, where and that makes sense when you're talking about consumer spending being much higher during the holiday season and so forth, right? So it kind of carries the sentiment of the overall market sometimes, where you get more people spending. The market is kind of anticipating maybe a good holiday season, so you get a little bit more bullishness. So I would say typically the third and the fourth quarter from a sentiment standpoint have been positive. So that could be a factor that can play out. But of course, history doesn't always dictate future, right?
Awesome. Yeah. So those are the 5 forces that we really wanted to go over today. So once again, thank you so much for joining us on Wall Street to Bay Street Sunday Chai with Sharia Portfolio Canada. If you have any questions or anything like that, feel free to put them in the comment section below, and we can answer them on a future video. And yeah, thank you guys for joining us.
Thank you. Sounds good.
Nadeem Mian, Portfolio Manager, registered as an advising representative, and Shamil Devji, Financial Advisor, registered as a dealing representative with Sharia Portfolio Canada Inc., a portfolio manager registered in the provinces of Ontario, British Columbia, and Alberta. Their opinions and statements expressed in this show are their personal opinions and do not necessarily reflect those of Sharia Portfolio. They are effective as of the date of this broadcast only and are subject to change. This discussion is for general information purposes only and is not investment advice.